What's going on, Lara Locke?
What's up?
Welcome to the podcast. Luckily, I know you've done one of these before.
Mm-hmm.
It's interesting how many times you've been around this a lot longer than me. It's so funny now that now every time I turn around, I feel like every week someone has a podcast.
Well, the podcast is the new thing to do, right?
Yeah.
People don't understand how much work and how much time goes into it, hence why I won't broach it.
You won't do one?
No, I won't. I've thought about it truly, but the reality is you have to specialize in something, and this is just not going to be my specialty.
Well, it's hard because people don't understand. It's like you have to have a team behind it, one. And it's not the podcast that's difficult. It's consistently finding people to do the podcast.
Sure.
Like you're not Joe Rogan.
Right.
So it's not like you have waves and waves of people hitting you up to do
For
it.
sure.
And the people that do hit you up, it's hard sometimes to have to say no, because it's like, what are we going to talk for 45 minutes about? You don't do a lot of production or you do nothing special. So it's like, how do we...
Now, how many business owners, how many local people have you had on here?
I don't know. This podcast is just for real estate.
Okay. And
then we'll do the other one called What's Good in Riverside, just for people in Riverside. We probably have done at least 25 people. I for sure did one deal last year because of it. I sold a house because I had him on, and then he needed to sell his house, so he sold it. So we're trying to do more actually this year, more of this stuff with people in the community. But even people in the community is kind of hard, trying to DM a business owner to come do this.
Oh, for sure.
And then it's like, why do I want to do that? Especially if they're older, they don't understand the reasoning behind it.
No, I'll listen to them. So I'll listen to podcasts religiously every morning. I'm listening to something, and I've listened to this particular podcast a few times over. And no matter who you have on, you always get a tidbit out of it,
For
right?
sure.
There's something, either camaraderie, oh my God, yes, I deal with that, or oh, that's kind of cool, I'm going to implement this.
And then the hard part too, what other people don't get is it's hard having people come on here as a host, and then the person starts trying to sell sell EXP or blah 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 or Tycor title, and then you have to kind of shut it down because you're this isn't a commercial for you. It's a podcast where we're talking about just talking it, but it's on camera.
For sure.
Because do you ever come across, now that you've been doing this for long and kind of have a track record in that, have you gotten used to people want to talk to me and ask me questions?
Of course.
You know?
Yeah. Well, obviously, if you do a certain amount of production or you've been in this business for a certain amount of years, you've seen a lot of things. So you have a higher level of knowledge. And so, of course, everybody wants to pick your brain on that. And that type of thing doesn't bother me at all, actually. No.
I'm starting to get away from it, actually. I'm stopping it. I'm starting to not answer questions in the DMs anymore.
So I think for you, because you've really branded yourself as a social media person, that, you really hit some of the new things hard and heavy, where to a lot of agents and a lot of loan officers, it's still kind of taboo. We're still learning how to get in front of the camera, how to even be comfortable in front of a camera.
You've gotten more on the camera, I feel in the last year.
Yes, in the last 2 years. Well, when COVID happened, what choice did I have?
Yeah.
So I was in front of the camera before that, but it's okay, we're doubling down. Now or never type of thing.
Do you run out of content to make or no?
No. Which is weird.
That's the thing too. Actually, I like it because it kind of forces you to think of new stuff to make, which then kind of I think it's kind of like cooking, you know what I mean? Let me throw this spice in it, see if a whole dish comes out different. It's same thing kind of with content.
It's cool. And I don't script anything. So we keep a rolling list of what content, just things pop up here and there. And then I'll record, let's say twice a month or whatnot. I do not look at that list before I record. I have my marketing person circle some things that she'll be relevant.
Yeah.
I turn that list over right before I go on camera, and then I start speaking on it. Because if you script it too much, things change so quickly in our industry.
I shot a video last week I literally shot a video last week about 9% increase in mortgage applications. I know that's down this week.
Yeah.
So I literally just
the data came out today.
I just shot a video that doesn't. And I've already shot it. I've already made it. And then in the video, I'm saying this probably will not be the same in a week.
Yeah. So mortgage applications come out every Wednesday. So they came out today, and it's both refinance and purchase that talks about where we are. Yeah. And they vary weekly. They vary. And it's really interesting. My degree was in economics, so I study kind of these scales, but mortgage applications or real estate will go down. It's like a micro or a macro trend across the nation at the same time. All of a sudden we have no inventory everywhere and everybody's freaking out about it. So what I love about those mortgage applications is you could look specifically in the Riverside area, and that same trend will be the national trend.
Well, and I think people don't realize, I think realtors don't realize, when those numbers change, then you can already kind of see the wave of what's going to happen in the market.
100%.
You know, and I think that's the thing that I've tried to get better at is like not guessing, but knowing like, okay, like why, as it flows, like we should know what's going to happen in the market based on those numbers.
Oh, absolutely.
And a few other numbers.
And you can tweak your business because of it too. Mm-hmm. So, you know, whether refinances are down or mortgage rates are going up very quickly. It's a very volatile market. Okay, so let's play out what that's going to do to
Which could also go the other way.
Which could very much go the other way.
I had someone text me like, are we locked into a rate? I'm like, we haven't even looked at a house yet, so no. And I was like, it could also go, but rates are going up. I know, but that could also go back down. It could change. Like there's so many factors. Like
so today is actually a big day.
Big day. The Fed's meet today. How many people in real estate don't know about today? Because they're idiots, but that's not here nor there.
So the Federal Reserve today is meeting and they're talking about, are they going to increase prime rate?
Do you think they will?
Yeah, 25 basis points at a minimum. I'm really curious what they're going to come out to see. They tested so prime rate has nothing to do, it's not directly correlated with mortgage interest rates. What most people don't know, it's just bank to bank lending. So your credit cards, your short-term lending. When prime rate increases, typically mortgage-backed securities, what helps our rates be what they are, they actually get a little bit better over the next couple of days. So we're very curious if they're going to talk about an increased prime rate or they're going to do something called quantitative tightening today.
So they're just going to stop buying back mortgages.
Yeah, mortgage-backed securities right now, they're buying them at tune of
very high rate.
Yeah, like
and I don't think that's what people
billion.
Don't understand. It's like that's why we've had low rates is the feds are just buying everything up.
Yeah, so the way I like to explain it to my clients is I don't go into mortgage-backed securities. I don't go into quantitative easing or anything like that. I just say the government has given us a stimulus package, and that is why our interest rates are so low, to, you know, really kind of make sure everybody understands it. And just like you personally no longer receive a stimulus package, our industry is starting that stimulus package is getting pulled away.
Well, and I think what people don't realize is like rates going up is actually a good thing. It shows that we are in a healthy market. And, you know, but I don't think it's like we were just here back in 2018.
Thank you.
That's why I think it's so funny. And that's why, like,
yes,
you know, and if people ask, like, people, it's like knowledge is the most powerful content.
Absolutely.
If you can talk about knowledge and information and break it down to a way for our consumers to take it in, that's the skill. But people don't realize 2018, if you're not working with an agent that was in here, not even in 2000, if they weren't an agent in 2016, because by 18 you're kind of starting to, like 2018, I had 10 new homes and rates were at like 4.85 or whatever it was.
They were kissing 5.
And we couldn't sell. Like I had 15 listings. I couldn't get one off the books. And so we were just there.
Yeah, we were just, I mean, okay, so here's
But
the
we
reality.
had more inventory.
There was a lot more inventory. Wasn't there like 1,500 homes?
Yeah, like we had, like, so that's what people don't understand. Is like we were just there.
Yes.
And now everyone's freaking out about it. But we got through it then.
Again, it's all about educating. So let's take it back a little bit. In the 2000s, the average rate, I think it was 6.17%. In the 90s, it was in the 8s. In the 80s, we were 15 to 20% at that time. 70s was 12%.
The problem is the government is built on cheap money, so the odds of rates ever going back to 16%, I wouldn't even think rates could go back to 6%, to be honest. I think the market would just halt.
Well, I think what they're doing when our stimulus package, going back to that, November and December of this last year, they pulled out a little bit. They took a little bit of that money.
Yeah, they're testing the waters.
They were testing the waters. And then it was January 1st came around and we had a big pop of it. I actually think what they're doing right now with potentially increasing, this is before we know, technically a few hours before we know what's happening, but I think what they're going to do is they're going to test the waters again. They're going to do a 25 basis point prime rate increase. And then once they see how it goes in the economy, they're going to do bigger pops of increases. That's when you're going to see your 50 basis points. So I think right now with this current government, this current Federal Reserve Board that we have, I think they're going to test the waters on anything. There's a possibility it can get to 6%, but I think they're going to slowly get us there. We're on a razor's edge on a lot of different things.
Well, I think what's going to happen at the end of the day, in my opinion, what happened in 18, like they did it. There was a massive halt in housing and prices dropped by 10% or whatever it was at the time. And then they're like, oh, shoot. Okay. Too much, too fast.
Right.
Like we need to dial this back a little bit.
That was a headache in 2008 in the mortgage world. I think the biggest headache I've had is when COVID first started, our market, the mortgage-backed security market, was so extremely volatile. It was almost a percentage.
It was like
point.
daily. It was daily.
It was my job was to sit there and lock in your rate at the right time. Like
I remember making video. That's when we started like the daily news videos. And I remember being like, today, this is it. And then tomorrow, nope. And then today. And it was like every day it was changing so much.
Oh, yeah. It was crazy.
Like to try to stay on top of it and then knowing what was going to happen. Like
you got banks shuttering down because they don't want the volatility. Like the investors are pulling down. You got products showing down. You have all these types of things. You're taking one loan to one lender to one lender.
And then they're locking up. And then all of a sudden you're like, oh, I qualify. Oh, no. Credit scores have to go, went up. Nope, you don't qualify anymore or whatever. I think that's the thing I always think is so interesting with our buyers or whatever people in the market. It's like if the market does crash, which I don't see it happening, inventory is way too low.
And we could talk about that too.
Yeah, inventory is way too low. It's so hard to get a loan now. Very. It is not what it used to be.
Right.
But you're not going to make any money. If you have no money now and you can't buy now, you're not going to be able to buy if the market crashes.
No, I mean, the reality is, let's talk about a market crashing. So I was around for 2008. In fact, I worked at Wells Fargo at the time.
I didn't even know what happened, to be honest.
You don't go watch the movie The Big Short.
No, I did, but like in the moment in time.
Oh yeah,
I had no clue.
So the first,
no idea.
It started. I knew a little bit of what was happening. I had just finished my degree. I graduated in 2006, and so my professors were
I did too, high school,
college.
Yeah. Close.
Okay.
Yeah.
UC Riverside.
Yeah. RCC. 1.5 years. Killed it.
IndyMac Bank was the first bank that I remember going down. It was a huge bank at the time, and they literally shuttered their doors. They had a lot of attorneys coming in and literally closing out the book. So it was a big deal, and it just started dropping right and left and right and left. Now let's talk about the differences between now and then. So in 2006, in the 2000s, you could walk and talk and get a mortgage. So at this time, I was not a loan officer. At this time, I was a loan officer assistant.
Missed the boat.
Right, I did. That's true. However, I learned a lot what I didn't want to be then. I saw people crying at the signing table because they were being sold their loan at the signing table. They'd already given up their earnest money deposit and this, that, and the other. So there was a lot of shady things happening.
I think that happens. I think that's happening now too. But
there is still areas where that does happen. I've seen it, but that's again where I'm like, that will never be what I am. So prior to that, your average FICO score was 600, 620. Now, well, during COVID, we're about 720 average FICO score. So you have very well qualified buyers. Then you are cashing out, buying boats, buying cars, buying all the toys. Now, if you're cashing out, it's A, because you're getting a divorce, or B, because you're investing in other property, you're getting into crypto or the stock market. People are not cashing out to buy toys. Not only that, the government cave in and has a conservatorship over us. So before, Fannie Mae and Freddie Mac, the loan servicers were private. They are not now. So now we have 2,500 guidelines for any given loan that we have to follow. And it is really like, I need all of your documentation. I need your pinky toe and a lock of your hair. And if you're pregnant during this, I need your firstborn. That's what it feels like getting a mortgage.
Well, I think what people don't realize is like, not everyone's meant to own a house. I'm sorry. And I think back then it was like, you have the right to own a house. It's like, you know what? Like if you don't save up money, have a good job and have a good credit score, like why do you think you deserve a house?
Well, during the 1950s and the 60s, earlier than that, the American dream was to purchase the house. And so it continued that way until there was too much profiteering in it. Once the profiteering happened, then that American dream had to be switched a little bit. Too many companies, too much on Wall Street made too much money, and it just was not sustainable.
Well, it happens when it's greed. And I think, that's interesting right now. It's like a lot of sellers like, oh, I'm holding on to it. It's like the moment they feel the tick going the other way, we're going to see a massive amount of houses hitting the market because they all go in the same wave. You know what I mean? So, like all these sellers are like, I have so much equity. The moment they feel that equity going away, they're going to try to cash out.
So I actually do think this is our golden hour, especially for you as a real estate agent. I'd be talking on this all the time. With interest rates going up, just like you said, you're going to knock more and more buyers out of it. If more and more buyers are knocked out of it, appreciation's not going to slam down, but it's going to slow down.
For sure. So it should slow down. We should not go up 20%.
No, it's not
The things that are worth $1 million now in the Riverside County market is ridiculous. $700,000 homes in Orange Crest that are 3 2s or 4 2s in a pool, like that's it's ridiculous.
It's not sustainable.
It's not, because what if those are worth $1 million? What are the $1 million houses worth?
For
$5
sure.
million?
For sure.
No.
For sure. Yeah, real estate over the long term being defined as 10 years or more, is supposed to go up 6 to 8% per year. When we have pockets of LA or San Diego at 27, 30%, here in Riverside, we are at 17, 18%. That is not sustainable.
It's not sustainable.
However, with the interest rates going out, we're going to knock a lot of buyers out of it.
Which then takes away demand. It's supply and demand.
So we have this beautiful golden hour right now where it's still the absolute best time to sell your house, and interest rates are still low, so it's the best time to buy a house. To me, if I was on the fence at any other time, this is when I would be jumping 2 feet off. This is what I would be pitching my sellers, and well, I do pitch my borrowers and buyers this all the time because this is legitimately, we are going to see this play out.
Well, and the thing is too, that's what I always say, people buy and sell to solve problems. No one gives a shit about money, no offense, but like you have so much equity and you're not selling, so you don't care. So so when buyers go, is this a good time to buy? Even if you own this house and you have $200,000 of equity, you're probably not going to sell it anyways. So what does it even matter? Like you think it matters because you want to care, but you don't. Because if we did, we'd have a massive amount of houses hitting the market because what's the average equity right now? Like 40%?
Yeah, it's
like people are sitting on like $200,000 in equity. It's like, dude, it's like, so you think that when you buy this house, it's going to matter, but it's proven when people have tons of equity, they don't sell anyways.
Well, also the problem
because that's like, where do you go?
Yeah, well, that's the problem. That's the big problem is we have all of these interest rates, these 2% interest rates, so we're super low, and we have all of this equity. So sure, I can sell my house. I'm going to parallel sell if I, don't have to relocate, if I didn't get a bump up. I'm going to parallel sell for a higher interest rate. So that's why a lot of people...
Exactly, it doesn't make sense.
Why am I going to sell?
Yeah.
So, it pays to know people in other states or for loan officers to be licensed in other states.
For sure.
Because it's not sustainable fully.
Do you feel like the mortgage industry is going to take a hit over the next 10 years because a lot of people who refi now are not going to be refining in the future because their rates are so low?
So yes and no. I think it's definitely going to take a hit for some loan officers that don't know how to steer their business the proper way. But there's always going to be cash outs refinances, and there's always going to be people selling their homes. And so as long as you have market share of referral partners, as long as you're adding value and keeping yourself educated, I think you're going to be okay.
Yeah, I think there's going to be a lot of loan officers in the next year and a half that built their business in the last year on refis that are going to be working at McDonald's.
There was a lot of loan officers out there whose portfolios were 70% refinances, 60% refinances. That's something that you have to monitor all the time. The last 2 years does not track. Like loans were falling out of the sky. It doesn't matter what I did the last 2 years in terms of production. It matters what I do now, and it matters how I grew from before COVID. One of the things I track, I think I'm 76% or 82% now purchase is because, and I started tracking it, or I started really caring about it probably 6 months too early, where I'm like, I'm going to pull off refinances and just focus on purchase, where I should have stayed a little bit longer. But that's really where a loan officer's business model is sustainable, is when they're at least 60% purchase business.
And it's hard. I feel really bad for loan officers. I would hate to be one, actually. To be honest, because you're literally riding and dying, on agents, and obviously you do your own marketing and things like that, and you have your own referral. But like agents are who brings you money, and agents are flaky or whatever. And if they leave the industry, then like I wouldn't like it because like the lack of control, you know what I mean, on knowing what an agent's doing because they're lazy half the time.
You're looking at it wrong. So yes, my job is to do mortgages, but I'm a good steward to my business, and I've spent a lot of time and energy devoting to that. So my job is, yes, to get business out of agents, but my job is to take those that want to learn, and I grow with them.
Yeah.
I build their business. I partner with them. And that's how you work smarter, not harder on it. I'm not just going to go out and be like, give me loans. I'm a loan officer. No, will you sustain through all of the economic turmoil that we always have? Can you be a good business partner? And that's how you build a good relationship.
It's interesting. Are you at a position now in your career where you are like, how many like young agents hit you up wanting like Zillow money, and you're like, pfft.
No, I don't have any spends with anybody.
Yeah.
And it's not sustainable for an agent either. We could talk about that too. So I track everything. I was just talking to the gentleman outside.
I track nothing, so it's perfect.
So I track where all leads come from. Are they coming from Zillow? Are they coming from Boomtown, Redfin? Anytime it's an internet lead generating, whether I had Zillow Flex, I pay nothing for it, right? Or Boomtown, what is it? Internet lead? If it is, they track at 3 to 5% conversion.
Such a low conversion rate.
So you as the agent, you're running around constantly. You feel super freaking busy, but you know what?
You're making no money.
You're not making any money. Yeah. So if for me coming in, when I explain that and I say, look, I have a track record. I can tell you, I had a huge spend. I had, upwards $10,000 to $15,000 spend trying to figure it out, right? until I started tracking it. So I can tell you firsthand that if I say, okay, so if you have a 3 to 5% conversion ratio, then you need 600 leads to close 30 deals or whatnot in a year. How does that track for you? Or we can take it down and really work our sphere, really get involved in the community. It's harder work. Let's be real. You do not have leads falling out of the sky that make you feel busy. But if you put in that work, then you can really 10x the amount of time that you have. You have more free time, get paid more money.
Well, I think it is definitely hard, to work your sphere. And but for me, what people don't also understand is it's not just the lead costs that you have to worry about. It's the systems in place, and now you're having dialers, now you're having ISAs, now you're having so when people see these massive teams, it's they're closing 500 transactions a year. Great. Well, they have ISAs.
Yep.
They have thousands and thousands of dollars in systems.
Yep.
They have all these things and then when agents want to know why they have to pay 50-50, it's dude, it's the only way they're profitable.
Oh yeah. Yeah,
it's such a huge overhead.
It's huge. And so I'm a process engineer. I love processes. Sometimes I love processes more than sales. I have to check myself quite often on that. I'm not even going to lie. Mm-hmm. But I've built out so many different processes, and that's after hours, after mortgage hours. That's after I put my kids to sleep. I would be in bed till 8 till midnight, 1 in the morning, get back up at 4 in the morning, just trying to build out some of those basic processes and then start revolving it and 10xing it.
Yeah. I sometimes wish I did 12 deals a year, to be honest. And I sometimes wish I had no office, in all honesty. I try to tell agents that all the time. If you can go from 12 to 17 deals a year and have no overhead,
oh, for sure,
you'll make great money.
Super profitable.
You're going to make so much money.
Right.
But you say that out so easily, and it's so hard to do but I think the hard part is the bigger you get, the expenses catch up, and then you have to then keep it going.
Yeah, you have
then
to.
You have to go
going.
My minimum is 30 deals a year.
Absolutely.
But you pay for time. I was talking to one of your agents, Nate, yesterday.
I love Nate.
And he was just he said something. I was yeah, well, this is $5,000 a month. The office is $5,000. My assistant's $5,000 a month. My video guy's $3,000. He's how do you spend that much money a month? I'm dude. I was one, I do more transactions.
For sure.
And I don't work. I work the things I want to work. And so I have one way or another. I pay for it, or I have to do it myself. I'd rather just pay for it.
So
it's one or the other.
The sweet spot in it, and you might be there now in your career, is you're not going to get more expenses. Now,
no, I'm flat
any transaction over your bare minimum is that additional profit. Yeah. And so that's how you scale it, is you get your expenses to where you overstaffed or overdid by design to get you where you are. Now the goal is to get XYZ percentage past that to make you more profitable.
Yeah, we could do, I think we could easily, we did 43 last year. I think we could easily handle 65 deals by myself.
Is that your goal?
I don't have one. I don't care. I don't have a goal because everyone who has goals when it comes to transactional base and financial base, it's, in my opinion, out of your control. It's not true.
I'm going to have to argue on that.
My argument to you is the way I do business is not I call 3 hours a day, or I door knock, or I postcard. I do no marketing that way. So for me, I just know that it's going to come. And if I do, this year I have 35 new homes that I'm selling.
So you're very unique in
the fact 100% I am.
That you really took everything on video, everything on camera, and it is a form of prospecting. But to those agents that don't prospect, you have to set a goal. I need to close 30 transactions this year. I'm going to get it from XYZ different places,
for sure.
Which means I have to prospect 3 to 4 hours a day doing XYZ activity.
My argument to anyone who prospects, you cannot do it for your whole career. So when are you going to walk away from the wheel of prospecting like that and actually step into...
It doesn't work like that, though. And I can tell you this from experience. You have to put in the prospecting work at least once, where you're grinding 2 years.
I agree, but when do you get out of that?
And then about 2 years, then you can pull back the prospecting, because your business will start referral based. You'll actually say, I've seen it a couple of times in my own career, to where I was just talking to somebody the other day of, we're shifting in the market. And so I'm looking at my mortgage business. I close about 25 to 30 loans a month. And I want to keep that even through the hard times we have. So I have to put in the work at least one more time. So you don't always have to prospect at that level. You have to put in the work at least once to get it self-generated.
The problem I see with the industry is that most people prospect, burn out, and then they're not even around. Here's my argument on anything in real estate. and anyone who wants to argue with me on this, I'd love to. If this was the way to do it, prospecting, door knocking, cold calling, postcarding, Zillow, Boomtown, all this crap, then why does the average agent does 5 deals a year, and why does a normal career doesn't last more than 3 years?
Well, one, it's too hard.
It's too hard. So that's what I'm trying to tell everyone.
Two,
you can't do it.
You find your specialty. You find
100%.
your niche. And so at first, you have to try all of these things to figure out where your niche is. And once you find that 1, 2, 3 thing that's your niche, then you double down on those. And that takes about a year to get to, maybe 18 months. If you could sustain that year, and if you can be smart about it, then you have a chance.
I agree. My argument about everything is that no one in this industry, brokers, especially brokers, and CAR and NAR and any of them, actually give a crap about agents. Because if they did, we'd actually change how we actually do this industry, because the stats that most agents make less than $30,000 a year and that most agents don't get past 3 years is a awful number. And any corporation ran the numbers that way, you would be fired as a CEO and a CFO in seconds.
And it's overwhelming. Like a new agent coming in, not only are you learning contract law, or not only are you learning how to deal with clients and all the emotions, but you're learning how to actually prospect. This is not even talking about sales skills.
100%.
We missed the sales skills boat long ago. That's like after you get used to all the grind that you have to do, then we're going to work on your sales skills, right?
The question is, should you work on your sales skills first?
I think you should.
Then prospect.
I think
because
you should.
If you have 1 million leads and you do not know how to sell, actually, I'm gonna cut selling out. You actually need to learn the process and knowledge about real estate transactions and use knowledge to sell your clients on the best decision for them.
I agree, but I also agree that you have to very quickly learn the personality of that client.
Agree.
So things like if you do the disc test, like every client I have, we quickly disc test them. So if you have aggressive, non-emotional, it's a high D. They're going to want short, quick answers. You're not going to spend all this time on the phone with them. Or if you have like a high C, that's like your engineer that's going to ask all the questions. You need to be prepared to answer all of those questions.
I agree.
So there's the one advice I would give anybody is learn your stuff, but also learn the disc test or some type of personality test to teach you how to properly take your communication style to communicate with your clients without too much getting lost in translation.
I used to wear different clothes to who I was meeting with.
I like it.
I used to wear navy. I had 2 suits when I first started. I used to wear a navy suit, look like a Republican, when I would meet with older clients. And then when I met with younger clients, I had this light blue suit that I'd wear with tan loafers with no socks.
So we ditched the suit?
Oh yeah, I haven't worn a suit in for years. Just for me, like I'm always so all over the place that for me, like a lot of my stuff is unscheduled. So it's like I don't want to perceive something that I'm not.
Sure.
I've sold houses, and I had a client one time, Dan, my client. I had to be at every showing. It's $1 million house off of Overlook, and he wanted me to wear a suit and tie every day, every time I showed the house. If I was showing up to his house, he didn't care if it was 110 degrees. I said, "You're wearing a suit and tie to show my house." So I told him, I said, "You buy me some ties then," right. And he bought me ties.
I like
but
it.
but at that moment, it was just like I would run home to throw a suit on just to go do that. And so, but I found my style, and I think
that's the most important thing, right?
Mm-hmm. I think too many people in sales, in real estate. I was actually talking to someone before this call or before the podcast. It was like, I'm like, Tom talks about it now, Ferry and all that. It's like, find your tribe. And that's what I tell people. You're not going to make everyone happy. Just find the people that want to work with you and then double down on the people that want to work with you.
Right.
That's it.
There's so much anxiety to that, though. There's so much anxiety to learning everything, figuring out what your
I have anxiety now.
Do you really?
Oh, my God. Yeah. I'll tell you an anxiety story over this weekend. It happened to me.
What happened?
So I had this past client hit me up to sell their house in Grand Terrace, which we're listing. Well, I don't have any follow-up with my past clients. Other than I send them CMAs 3 times a year, and they follow me on social media. So she hits me up. Hey, we want to sell the house. I got a different job in Texas. Oh, great. Cool. We'd love for you to come over to the house. Cool. Show up just like this. Actually, I threw a jacket on. Not like I threw a jacket on. And, oh, cool. Blah, blah, blah. Literally, nothing's really changed from when I sold it to him. Okay, cool. Well, I'll tell you price tomorrow. I don't really know what we'll sell this for. Well, I text them the price, and they weren't happy with the price I gave them. They were like, oh, we were thinking a little bit higher. So we're going back and forth in text until like 9:30 at night. And it's like, I text them 45 minutes. They text me back. So I'm like laying in bed Saturday night, like, did I just cost myself a $600,000 listing because I got too comfortable and I threw a number out there when I should have called them. So I ran here the next day on Saturday morning, shot a video on my whiteboard breaking down why we're going to do that price.
Smart.
Right, that, and what the game plan is to sell it, because I think it'll sell over 600, but a seller sees, 600 grand. It's like, we just sold a house 75,000 over asking price. What people don't understand is sellers decide if a house sells, buyers determine what it sells for.
Yep.
I don't care if you think your house is $1 million. If there's no buyers out there that want to pay $1 million for it, it'll never sell.
Yeah.
But if you list your house at $1, buyers will bid it up for however they want to spend. Anyway, so I shot the video, sent it over to them.
Good job.
And I have a system called Vidyard that sees how long they watch it. So then I get a text. I'm in the gym. I get a text that they watched 100% of it. And my work phone's in the car. And that's something that you'll learn down the road. You need to have two phones, but I'll do, Anyway, so I have all this anxiety in the gym because did they text me back? Did they like the response? Did they like the video?
Right.
I get in the car and they're like, fantastic video.
Right. Good job.
We totally trust you.
For sure.
We just need to see
People
the plan.
just need the education.
But like even someone at 6 years, like the anxiety of being like, did I just cost myself 18 grand? Sure. I think that's the thing that people don't understand. Is like it goes away a little bit, but it's still always there because you want to be liked.
For
we
sure.
all want to be liked.
All of us,
even though everyone thinks I don't care what anyone thinks. I want people to like me.
Right.
I want to do deals.
Right.
Because we have staffing. You have staff. I have staff. Like,
absolutely.
If I don't close deals and I can't pay their payroll,
right,
they don't get food.
Yeah, I think, yes, does it go away? I think it goes away because your process changes a little bit each time that happens to where you get a little bit better.
Yeah.
And so maybe next time you go on a listing, you're going to shoot that video anyways.
Well, I think
you know it was a thing.
Yeah, I think I just got a little too comfortable. And I just, but then at the end of the day, like the anxiety was unnecessary.
For sure.
Like they're like, we 100% trust, like literally in the text, we 100% trust you. And it's like, but why do they trust me? I don't send them birthday cards because they watch all my videos every week.
So I can tell you that, okay, so I'm in a coaching program.
Of course you are.
Of course.
You're in a million coaching programs.
No, just one.
Every time I'm with you, you're like trying to pump me on a new coaching program.
I've only been in one coaching program.
Well, isn't that mastermind thing or whatever?
It's the core.
Oh, yeah, the
That's
core.
That's the only one I've been in. Anyways, my current coach now closes about 150 deals a month. He is a no-joke loan officer, right? One of the top in the nation. He's up in Washington. And the last coaching session we just had, I'm having another one tomorrow, is we just mastermind the entire time because of some of the anxiety. So I don't care if you produce one a month. I don't care if you produce 200 a month. You're feeling the same things.
You always feel it, and it sucks because it's the one thing you will never experience until you're in that place.
Oh, absolutely.
And anyone who's a loan officer or agent, like it doesn't matter. Like you said, if you're closing 1 or 150. When you get to 150, honestly, I think it's almost more when it's 150 because now you have like staffing that you're worrying about.
Oh, yeah.
Overhead.
Oh, yeah.
Business plan. You have way many more decisions to make.
Scaling.
Should we go bigger? Should we
Yeah.
try to get 250 deals?
Yeah. So what's
Are we
enough?
in the zone?
What's enough? Is it you start?
Am I happy right now?
I'm at 25 to 30. I want 50. Okay. When I'm at 50, am I gonna be like, I want 75? You're always
you
gonna
have
be
to find
chasing
that
it.
balance.
For sure.
Agents will call me up and I'm like, dude, you couldn't even handle 4 deals a month.
They probably could. They'd be pulling their hair out. They'd be designing systems really quickly or falling off the board.
When you want to do 48 a year, you might be able to do it for 1 month, maybe 2.
Yep.
Wait until 3, 4, 5,
Oh,
6,
that
7.
burnout is real. Well, you have to be a good steward to your business. You have to be constantly looking at it and say, okay, is this sustainable for me? Is this sustainable for my family? What do I need to do to continue to handle this and grow?
Well, and it's then now you got to hire an employee. Mm-hmm. And then did you hire the right person?
So I've hired wrong people, right people. I've learned all the lessons in hiring. I will continue to learn lessons in hiring. But I can tell you that my why, why I grind, why I continue to do has changed. Yes, I want it for my family. I want a certain lifestyle for my family, but my why has changed for my team. Mm-hmm. I have a team of women. I love them. I want to teach them consistently about money, how to be a good steward of business. That's my why it's changed. So I actually I think everybody, when they get to 3 to 5 a month, should have one employee, and then you're responsible for another life, another family.
Oh, for sure.
And it drives you in a different way.
You differently. Someone said to me the other day, well, you don't have a wife and kids. I'm like, I have way more than a wife and kid, okay? I have 3 employees and an office. Trust me. You think your wife and your kids can eat top of ramen for a week. My clients or my assistant or whatever, if paycheck don't come in on the 15th, it's what the hell.
Right. No, it drives you. It pushes you. It gives you anxiety.
I work for her. She don't work for me.
Oh, it's so true.
She pimps me out all the time.
I would do anything for my team.
Oh, for sure. Me too. I think but people don't agree. Some people hear me rant about real estate and stuff, but it's like, I'm here every day. I love this shit. You know, I fucking love it. And I think that's the biggest thing is stop trying to do what you think is going to make you the most money and just do what you want to do every day. Like, people are trying to do the podcast thing now. I see once a week someone in this market starts a podcast because whatever, it's a cool thing to do, or they see mine or whatever. I'll take credit. I think, people see it. And I'm like, okay, but if you don't want to do it, it's not going to last.
No. And the work behind it is a lot of work behind it. There is a lot of content to it. You do have to be careful who you get on and how you get them on and when you get them on.
And you have to not be scared of, I'm going to say something that someone might like that might offend someone.
You don't want to be canceled?
I don't think I'm cancelable. I mean, it's funny, even though I'm so off the rails, I am so careful on what goes online that I would never let something get out.
All right. So I've seen you grow just like you've seen me grow in the last couple of years. What's 3 things that you feel like through tripping on your own 2 feet that you've learned? What's your personal growth story?
I think I don't even know. I think that you have to just realize it takes time and there's no fast track to success. And you might be successful. You might pop off 20 deals in I'm weird. I did, not a lot, but in most agents, like to say I did 25 deals my first year, like that's a lot of unheard of.
Sure.
And then I got a little too cocky for my bridges. And then it's like, can you do it the next year and the next year and the next year? I grew too fast, too soon.
Staying humble.
Staying humble for sure. I didn't double down on the things that I believe in, and I listened to other people like postcarding, Zillow, cold calling, things like that, when it's just like, none of those things brought me business, and I'm spending money on them every single month.
Yeah, but you know what? It taught you, though.
They don't work.
They don't work, which is sometimes that perspective. 100%. Perspective is the most powerful thing.
Because then you know. And then the third thing probably is like, I just kind of you have to give up on things that just aren't working. And you can't keep forcing them. Like, I'm just not someone that people want to work for. And I don't know why that is. I don't know if we're just in a weird market where we don't have, like, you're in Riverside, the average agent's like 58 years old. Like, you can't name 15 agents under the age of 35 that do deals.
Yeah, well, I think your particular niche in terms of getting in front of people, and you have your particular personality where you just don't care about some things, right?
Yeah.
You don't care, like you care what people think, absolutely, but not enough where it's going to limit you.
Well, because it's at the end of the day,
that's not a normal mindset.
Well, I look at it as like you don't have to. Something I truly believe. I take no advice from anyone that doesn't have to deal with the outcome.
Yeah.
So like, why should I listen to you how to run my real estate business? Where if that fails, you're not the one coming to pay me the difference from what I made, or whatever that is. I think that's the thing that how many agents. If there's one thing I hope agents can learn from me, especially in this market, if you are not creating content because you are scared what other agents in your office might think about you, you are making a complete mistake, because that agent doesn't pay your bills and that agent is going to be gone in 5 years.
Yeah, and getting uncomfortable is a sales skill. You have to be uncomfortable. And let's be real, you do video, I do video. Do I trip over myself?
All the time. Who gives a crap?
I don't care.
Or making a bad video.
Yeah, I don't even edit it out. That does not get it edited out. I will say, keep it in there. It's fine.
I think that's the thing too, is that's like, at the end of the day, I know people say things about me, and I've gotten over that, because you know what? Joe Rogan gets crap talked on him, and Joe Rogan has changed so many people's lives.
Sure.
He has put so many people on and made people so much money. You can find anything on anyone.
But would you say he's very humble?
I would say yes. I would say he's now humbled but he just stays in his lane now. And I don't think he goes outside his lane.
So I think that's where he's getting a bigger following, at least from my perspective, is that he didn't care, and he got humbled. And the humbled with the not caring makes for a good personality mix. And I actually think you are there.
I think I've grown a lot in that aspect, because I hope people want to see now is like, I want to change the stigma, especially in this market, where it's like, you can't put on another agent because they don't work for you, or what, or like, Or like I took a picture with Danny Coronado like 3 weeks ago at his event. He texted me, was like, hey, I'm throwing this thing. I'd love for you to come. I would never work with Danny Coronado. He knows that. I would never work with him. I have my people. But Danny's throwing an event. It's nerve-wracking to throw an event. What if no one shows up?
Right. So you've done that for me. You've showed up.
Exactly.
And you're not going to work with me. You've got your people.
I show up. I take a picture with him to support Danny, even though I don't, congrats, dude, you're trying.
Right.
And then, what are you, working with Danny Coronado now? Can we take a photo with Danny Coronado? It's like...
Danny Coronado is good people.
Who gives a shit? I took a photo with someone.
Right.
Why can't I put him on blast? I like him as a person.
Right.
Just like you. I can't have Lara Locke. I can't have Lara Locke on my podcast because I just had Brian Decker and Joelle Southern on my podcast. I can't have Lara Locke. That's too... Or Scott Gieser. Oh, Scott Gieser's a recruiter for Windermere, another brokerage in my market. And I think that's what I hope people can learn. It's like, if we can just all team up, the players.
Oh my God, you learn so much.
That's all I want. When people go, what's the perfect office for you? You know what? My perfect office is me and 4 other people who do at least 25 deals a year that are innovative, that I make no money off of, but we collaborate every single day.
Oh, yeah. From doing just this podcast
just
alone,
this.
How much have you learned?
So much.
Right.
So that's my thing, is like, you cannot do this on your own. So all you agents that are trying to not talk to anyone, not stay in your office, that no one supports you, you are never going to grow.
I'm glad you brought that up, because that's actually where I get most of my clients, is collaborating, talking to other loan officers. Like,
yes,
I'll call Danny or I'll call Dustin Bingaman out in Redlands, and I'll just, hey, how's it going? What are you doing? Even Joey
No one gives a shit.
Even Joey Roque at Secure Choice, I'll call him up and we'll talk, what's this? What's out? Content comes from that. Just how the pulse of the market come from. It doesn't matter. Nobody's going to emulate me. Nobody's going to emulate.
There's too much business out there.
There's too much business, and what I do or what any other loan officer does, there's a process behind it, and not everybody wants to put in the work.
Not everyone's going to want to work with you,
no,
and you just got to get over that.
That is true.
That's the one thing that sucks about being heavy online. Is when I see someone list their house with someone else, and I'm like, are you serious? Have you seen their photos? Have you seen mine? How could you? But I don't. Maybe they've been having dinner with them every Sunday night.
Or maybe they just picked up the phone and said, would you like to list with me? And then it was the right timing.
Or they were at a barbecue.
For sure.
Or they were here. It's
For sure.
It's sometimes just luck.
Now, the only issue I have with you is that you don't actually have any sort of follow-up with your clients.
Zero.
If you just had a small little CRM where you have a little build-out.
And you know why? And this is
especially with the people that you work with who are big process people.
My insecurities. I'll tell you, it's my insecurities. I am so worried. This is the reason why I sell real estate the way I do. I am so worried about bothering people.
Really?
I have the biggest fear of bothering people. The biggest fear.
But it's not like you're attacking them. Like,
doesn't matter.
You're not follow up.
It doesn't. I have the fear.
Okay. All right.
That is my fear.
Let me just argue something.
Sure.
Two bothers during a year. You have your social media.
Yeah.
Of course, you're talking to them on that. But what if you just had a CRM and did like a birthday gift?
I know. Trust me.
That's not bothering them.
I know.
That's making them feel good.
I know. I'm just so weird. Like, you know what I really wish I could do? This is on my to-do list this year, is actually hire an in-person woman to give me that softer touch.
An in-person woman.
Yeah, because my assistant lives in Tennessee. So like in office. That's what I meant. Like in office, sorry. Clarify that. But like I struggle so much with the soft touch. It and I don't know if I feel like it's off brand. I don't know if I'm just scared. Like, honestly, I just don't, it is a fear of mine. Like, to pick up, like, there's some clients for sure. But, I've done over 200 transactions. Like, there's just some clients that I'm just not great at going like, hey, I have really nothing to talk about with you.
No, okay, so that's okay. So let's work within your zone. So your zone, if you don't want to bother people, if your zone
that's why I started the podcast.
Well, I like that. I do. But I really do think you're missing the mark and keep them top of mind.
100%
and
I am.
You're going to stay, yes, you're doing great now, but you've labeled yourself as a transactional agent.
100%
that
I
you
am.
struggle getting in relationships with people. And you know what? That's my biggest anxiety too, is one, what I work on is asking for business.
I'm terrible at that.
Because there is anxiety, but that's my job. Like, I have to say, calm down, get your ass uncomfortable, and ask for business.
For sure.
But you know what? I can still call my clients and say, hey, you know what? Here's what the market is doing. Guess what, Mr. Jones? Your house is worth $200,000 more.
I do that 3 times a year.
Okay, so
and I have auto emails that go out every month. I do that stuff, but like, I am like terrible at the happy birthdays.
That's the best time.
I know. I'm just terrible at it. Honestly, I'm just really bad at it.
Okay, so birthdays, home anniversaries, knowing their actual wedding 100%. Anniversary, those are just small touch points that cost you minimal amount of money. You could do a video and send it out.
Get it. Okay, I won't preach the choir. It's something I definitely know about.
Thank you cards.
I
was just thinking of you.
See, I'm terrible at that stuff. I guess for me, I'll be honest. You know why I struggle with it? Is that the one thing I do hate about this industry is like I did a great job. That's not enough. Like I hate, you have to send your past clients gift cards every quarter or da-da-da. And I'm I hate when people say that.
You do need to create I do agree. You have to have an in-person, man or woman, it doesn't matter. It needs to be a client concierge position.
We're actually going to start throwing events.
So I like it. So
that's something
your client concierge can help you with those events. Your client concierge can help you with the birthday program.
But then the hard part is like hiring another person.
Yeah, no, it's true.
Another staff.
I do like that this is my weak point and 100%. I have to hire around it.
This is an ongoing problem that we're trying to work on.
But it's something that you can work on as well.
No, for sure. We're like in the process of working on it. It's just something I'm really bad at.
I like this.
This mic's really falling right now. But trust me. I know my flaws. I hope I know exactly what I suck at. That's why I don't call. But no, it all comes down to I'm so scared to bother people.
I don't think it would be a bother, especially if you're a consummate professional, especially if you have the knowledge base, especially if you're the guy. If you're the guy that has the contractor, the AC guy.
I do. I mean, that's the thing. The one thing I will say, my clients hit me up. My clients hit me up when they need something.
Right.
And I hit them up when I need something.
Okay.
And that is great. And I get great past client business. You know, I did half my business last year was past clients.
So 50%.
So I do a lot of half.
Okay,
I do get a lot of referrals.
I like it.
And I do get a lot of past clients. Just for me, I'm not good at the soft touches or like even like closings. Like I'm not great at like the balloons and like here's your keys. Like I just don't know, and I don't know if like I've gotten to a point where I'm so out of touch in transactions now that I used to not be in. I'm not great at that anymore, you know? So it's something we're working on. It's definitely a flaw in my business.
For sure. I mean, we all have our flaws.
I just think that's the thing too, is like you gotta like real like perfect. I know I need to hire a woman because I think a woman has a softer touch that I can't provide.
Sure. I mean, yeah. Well, it doesn't even have to be a woman. It could be somebody maternal or paternal where this goes back to a disc test, right?
Oh, for sure.
So you want
I'm a double high D.
You want to, yeah. So I am a 100D and a 94I. So the I is the one that is more in tune, is a connector, is more in tune with an emotion. So if you need that position, you need to hire that I. Now, an I always wears their emotion on their sleeve.
That's
and so you will have to get used to that. Yeah. Start reading on it.
Suck it up and go to work.
Learn love languages. I deal with an office full of women. In my office, there is no drama. We do not have drama. We like each other. We learn each other. Yeah. It's all about knowledge, education, all of that. It's a big thing in my office.
Yeah. I think that's the thing that I want. Like none of us will ever figure this out. There's always more you can do.
Mm-hmm.
You have to find the perfect balance of like what's enough for you.
Absolutely.
You know, because it's never enough. It's never enough money. I hope everyone realizes that because you always just spend it. It's never enough. You can always have a nicer car.
I do not spend my money. I save it. Did you know that's a proven study between men and women that men actually like stuff, so they go spend it, and women will squirrel it away?
I enjoy nothing.
You enjoy? Oh my gosh!
Like my Range Rover, I just bought. I only bought it for tax reasons, and I already want to get rid of it.
You enjoy your dog.
I enjoy my corgis. That's about it.
Yeah.
Like those two things are the love of my life, and I literally would spend like $10,000 on them if I had to. Like whatever. Like whenever they go to the doctors and the vet, and they say like, if something happens, how much you want to spend? I put unlimited.
Aww.
I will literally.
So that's me. My husband will be like, no, $1,500.
No, literally unlimited. Like. But like items, like I don't own any watches. No designer clothes.
I'm the same way.
No, I don't.
For better or for worse.
I don't have no fashion stuff. I don't have any. I live in a 1-bedroom apartment, and then that's a whole nother argument when people get on me about living in an apartment.
So what are you gonna do, especially we can see the market has the potential to change pretty quickly? How are you gonna steer your business? If interest rates do go up, if we have less buyers, if we still don't have enough inventory, what are you going to do?
Well, luckily I have 35 new homes this year. So this year I'm set. And I think that moving forward, I think that what people don't realize is that it's not the good times that I'm looking for. I'm actually been waiting for the bad times because I'm so financially secure and strapped. I have no debt. I carry no debt. I have a small apartment. I have no leverage on me. So at the end of the day, like if it gets tight, I have reserves. I can save, right? I can allow the agents to leave the market that take the 1 to 2 deals from me, and I'll still keep on making the content that I'm making because it's going to be even harder. And when it gets hard, that's when people look for the true expert. Right now, anyone can list their house. It'll sell $30,000 above asking price and no one cares. But when it gets hard and people feel the stress, who do they go to? They go to the experts. And if you have not been branding yourself as an expert and you've been branding yourself as an agent or loan officer that dances on fucking TikTok, when it gets tough, they're not going to go to you. And that's the thing that people, I'm not branding myself for now. I want people to think when shit hits the fan.
Future proofing.
100% I am. It. Right? Like, I want people to be like, what is going on in this market? I need to go to Adam's Instagram to see what videos he's making.
So knowledge, no matter what, is 100%. Power.
Double down. Knowledge will always win.
I vehemently agree. Vehemently.
The smarter you are in the room, you will always bring more value to everyone else because you have to be smart on what's going on and then knowledgeable in transactions where if this happens, I know I've had a guy kill himself in his house the day before going on the market and I listed it the next day because we had to, and that's what had to be done. And you know what? That client loves me till forever.
I thought he killed himself.
Well, his wife.
Oh God, that's
right?
Horrible.
And so what people don't understand is like, what do you do when that you're worried about a low appraisal? That happens all the time. You're worried about squatters? Check, we got that. You're worried about this? Check. We worry about you losing your job midway through escrow? We got that. We can handle anything that comes your way. So when it gets tight, because it's gonna get tight.
It is gonna get tight.
And your 1 deal a month you don't get to do anymore, make your 16 grand and live off it, and you have to go work at McDonald's. Congrats. But I'll be the one people are searching for.
So in terms of knowledge, where do you go to? So for me, I have a site called MBS Highway. I'm always on Yahoo Finance. I've been on Yahoo Finance for years. Rates are going up this moment. Actually, I'm just getting an alert on my phone. I have alerts set up when they hit a certain amount that Google dings me about it. So it just happened. I follow certain patterns in the market. You as a real estate agent, where are you going?
I go Google every day. So every day I walk in and I Google Southern California real estate news, and then I just see what the top articles are, and then I also have Google alerts. So anytime an article comes out, Inland Empire housing, new housing laws, whatever, I get an email. So every day I'm getting emails about articles, and then I go like Wall Street Journal, LA Times, Press Enterprise. I go all those major websites, and then every single day I'm just searching to see what video I'm going to make for that day.
For sure. In the mortgage world, Fannie Mae, Freddie Mac will announce something. FHA, VA will announce something. They normally do it after hours. I have Google Alerts set up on my phone. Yeah, so I just have Google Alerts.
So it just gets an email, and then it just comes to me. And then it's what I'm just feeling. You know, sometimes it's like, what am I feeling in the market?
For sure. No, one of the things that I like about your videos that I try to do consistently is I try to make it tangible. Like you do your whiteboard videos. And at first, are you on Vibe? Do you have Vibe board? You have a Vibe board.
Yeah,
now
of course.
You've
come on,
signed,
bro.
Okay.
What do you think is amateur hour? Where we have whiteboard? Come on. Even like that, like when I told someone,
whiteboard was still fine. It made it tangible.
Oh no, for sure. But like when people are like, oh, you spent $5,000, I'm like, yeah, it's awesome.
It's $3,800 plus taxes.
Exactly. It's awesome.
Yeah, I love my Whiteboard. Absolutely.
It's so cool, and it's only going to get more use.
For the record, I was on video with it before anybody. I'm just saying.
Before Decker?
Yes.
Oh, damn it. So anyways, I got to wrap this up because I got another podcast right there. Laura, it's always a pleasure.
Always.
I think it's like I said, I hope what people start understanding is the more you talk and the more you interact with people in this industry,
the more you educate yourself,
the more you're going to learn.
Yeah.
And that's only going to make the industry better. And it's sooner or later, hopefully, I doubt it will ever happen, but the sooner or later, the low end people get out of the industry, it'll make it better for everyone. And it's like we have to start,
or we bring up our low end people.
He's got to start teaming up with people, even if you don't work in the same office, or even if you don't profit off of them, like connecting with top end people and just having conversations strives for knowledge. That's the only way you're going to learn is by just talking to people.
It's called the bigger pile theory. When you go to someone that makes more money than you, closes more deals, and you ask them to mentor you.
Yeah. I wanna hang out. Like, I love people always ask me, like, why do you leave brokerages? I'm like, I left. I was at a brokerage. I was the number one agent. I went to another brokerage. Then I became the number one agent there. Then I left to another brokerage. And now it's like, okay, and now I've topped out everything I can get from these people. Okay, I'm gonna go somewhere. Like, it's okay. You're just going around taking knowledge from people.
For sure.
That's it. So
thank you, Adam. It's
appreciate you guys. Until next time, guys. Peace.